Investing in buy-to-let property on yield alone is a huge mistake. So let me explain. Yield is not a strategy, it is the starting point. So for investors that use it as the key metric, they're gonna make very expensive mistakes. Your yield is calculated on your annual rental income against the entire value of the property, and it will tell you nothing about your net profit or your return on capital. So typically the higher the yield, the greater risk of void periods, tenant turnover, and just in general, weaker tenant profile. This means that your property will either sit empty or you're gonna be stuck with a poor quality tenant. So that amazing 10% yield can very quickly become zero or even negative return on investment for you when problems arise. For the investors aiming to build long-term wealth and predictable passive income, the ideal yield is typically going to be between 6 and 7%. And this will represent a balanced asset that has strong fundamentals and the best tenant profile and demand. At the Property Lab, yes, we look at yield, but it is one data point of many. The key Polaris star metric for us, and should be for you too, would be return on capital employed. If you want the exact framework to secure the best assets, comment invest below and I'll get in touch.